Hey everyone, welcome back to Corporate Decode, the place where we try to make sense of what big companies are up to. And sometimes that means diving into some pretty dense documents. And today's report for Sonnet BioTherapeutics Holdings involves a little bit of a nail-biter situation that I think you'll find interesting, especially if you're into companies trying to get back on their feet and stay listed on major stock exchanges. Alright, so what we have here is a current report from Sonnet BioTherapeutics Holdings, filed on July 18th, 2025. Think of this as a quick update for investors and the public about something important that happened recently. Now, the big thing that triggered this filing is a heads up from the Nasdaq exchange. Sonnet had received a notice because they weren't meeting a requirement to have at least $2.5 million in stockholders' equity. Basically, they needed a certain amount of money held in the company to stay listed on Nasdaq under their rules. This means that for a while, Sonnet was in a bit of a tricky spot. They were told, hey, you need to get your stockholders' equity back up above this $2.5 million mark, or we might have to delist you. The problem is when a company gets delisted, it can be really bad for its stock price and its ability to raise more money in the future. So this is a pretty serious warning of the future. Now, here's where the story gets interesting and hopeful for Sonnet on July 15th. They closed a private placement. This is basically a way for companies to raise money by selling their stock directly to a select group of investors, not through a public offering. The amount they raised was about $5.5 million from this private placement. Should definitely help them meet that requirement oldie and welcome threshold. And $5.5 million from this private placement should definitely help them meet that requirement. But wait, there's more. On top of that money from the private placement, Sonnet also got about $10.5 million from people exercising warrants. These are like options that give holders the right to buy stock at a certain price. When people exercise these warrants, the company gets cash. So adding this $10.5 million to the $5.5 million from the private placement looks like Sonnet has brought in a significant amount of money. Recently, because of all this new cash, Sonnet believes they now have more than the required $2.5 million in stockholders' equity. They've essentially fixed the problem that Nasdaq pointed out. However, they are still waiting for Nasdaq to officially confirm that they have met the requirements and are back in good standing. It's like getting a good report card, but you're waiting for the school principal to sign off on it. As of this filing, they have about 6.2 million shares of common stock out there. This is just a detail about how many shares exist right now, but it helps paint a picture of the company's scale. And the report concludes with the necessary signatures to make it official, with Donald Griffith, the Chief Financial Officer, signing off on it on July 18th, 2025. Now, let's look at this from a broader perspective. Sonnet BioTherapeutics has been through a rough patch. They were facing the possibility of being kicked off the Nasdaq, which, as we discussed, is a big deal for a company like this, especially one in the biotech sector, where funding is often crucial for research and development. However, they've taken proactive steps to address the issue by raising capital through a private placement and warrant exercises. This shows good financial management and a strong effort to comply with listing requirements. Arj says this shows good financial management and a strong effort to comply with listing requirements. Brave, as we've discussed, is a big deal for a company like this, especially one in the biotech sector where funding is often crucial for research and development. However, they've taken proactive steps to address the issue by raising capital through a private placement and warrant exercises. This shows good financial management and a strong effort to comply with listing requirements. Raising this much money from these sources suggests that investors still see potential value in Sonnet despite its recent struggles. The key now is that the company's future success will likely depend on how effectively they deploy the funds raised here in their research and development pipeline, developing their therapeutic candidates, and ultimately bringing them to market. They need to translate this financial lifeline into tangible progress in their business operations. The risk for Sonnet is that even with this capital influx, the underlying business may still face challenges in achieving profitability or market acceptance in a competitive biotech landscape. The opportunity is that with the Nasdaq listing secured, they have a better platform to continue their work and potentially attract further investors. The opportunity is that with the Nasdaq listing secured, they have a better platform to continue their work and potentially attract further investment or partnerships. Based on this filing, Sonnet has successfully navigated a critical hurdle, but the real test of their business strategy and their ability to deliver value to shareholders still lies ahead. They've bought themselves more time and resources, which is a positive step, but success is not guaranteed. What's your take on Sonnet BioTherapeutics Holdings and their recent fundraising efforts? Do you think they can turn this around and thrive? Let us know your thoughts. in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more deep dives into company filings. Your support helps us keep these videos coming. Be sure to check out our Discord community linked in the description for more discussions and updates. Thanks for watching, and we'll see you in the next one.